Since Christmas Eve, the Russell 2000, otherwise known as small cap stocks, have fallen over 10 percentage points as an index, which now puts that index into correction territory. The Dow Jones Industrial Average is down well over 6%, S&P 500 down about 5.5%, and the Q is down about 3.5%, which puts all three of those major indexes now into pullback territory. This is a widely followed fear and greed index in the stock market, and we are now at extreme fear, just barely in extreme fear for the fear and greed index. If we look back to the previous close, we were in fear, very close to extreme fear. A month ago, we were at neutral. A week ago, we were in fear. And then a year ago, we were actually in greed territory when it came to the fear and greed index. Now, when they do the fear and greed index, it basically looks at several different factors to kind of give this overall, are we in a neutral market, fearful, extreme fear, greed market, or extreme greed, right? So market momentum is one of those. The S&P 500 and its 125-day moving average, that's in extreme fear. Stock price strength, or shall I say stock price weakness, the net new 52-week highs and lows for the New York Stock Exchange is now in extreme fear as well. If you look at the market breadth as far as strength and weakness, obviously we're trending definitely toward that weakness area, which now puts us in extreme fear. Put to call ratio now has entered extreme fear. It has obviously ramped up substantially recently. Do keep in mind, you usually get bottoms in the market whenever the put to call ratio goes over 0.9, especially when it starts to approach 1. So that's when you're really getting crazy, because basically, if you start to have as many people betting against the market with put options as are betting for the market with call options, usually you're in an extreme, in my opinion, extreme fearful market at that point in time. If you look at market volatility, the VIX and its 50-day moving average, we haven't gotten the VIX to go crazy yet. So the VIX is kind of chill. It's in neutral territory right now. Safe haven demand, the difference in the 20-day stock and bond returns, is now in extreme fear as well. We have some drama in this market. I spent $70,000 on 7 stocks here today. First thing we're going to speak about is why big buy today? Why not tomorrow, next week, next month, next year, things like that. Second thing we're going to get into what 7 stocks I bought here today. I'm going to share screenshots of all 7. Third thing is my 3-year price targets for all 7 of these stocks, which is going to be extremely important. I think section of this video, because basically I'll be going through all 7 of the stocks and showing you my projections for them, okay? Hope you guys enjoyed today's video as always. All I need from you guys for a payment for this video here today is for you to smash that thumbs up button. I hope you can do that for me. I appreciate y'all joining me. As the sign in my garage says, hit the subscribe button and smash the like button, okay? And by the way, I think most of you guys watching the video right now are probably subscribed to the channel, but if you're not subscribed and you want to subscribe, join us, subscribe. It's free to do so, okay? If you're looking to access all my premium courses, private Discord chat, exclusive weekly videos, all that good stuff, click the pinned comment down there, fill out a form. We'll see if we can get you access to my private stock group maybe later on this week, if this is your year to take it up to another level and get that 6-figure, 7-figure, or 8-figure account, okay? Let's take it up to another level. Now, why big buy today, okay? Well, first thing I want to say is usually when you see me doing major buys like this, like let's call it tens of thousands of dollars, usually it's a pretty bullish indicator. It usually means there's got to be some real opportunities I see out there in the market. So for instance, this is a video I did back in 2022. Actually, it was Halloween Day I did that video, October 31st, 2022. I just spent $77,000 on one stock in 7 minutes. And the stock I was buying on that particular day was Meta, which was pretty, I would say, a pretty bullish indicator that I was spending this aggressively on Meta stock, right? I bought 650 shares at $93 there, right? I did a big buy here, 177 shares, 93.41 in that particular portfolio. And so that was a pretty, in my opinion, bullish indicator for Meta that I was investing that aggressively. But do keep in mind, 2022 was a year I definitely got slapped in the market, right? I mean, let's keep in mind the NASDAQ went down like 37+%, peak to trough, between where it peaked at in the fourth quarter of 2021 to where it troughed at in the fourth quarter of 2022, right? And so I got comments like this. I bought about $15,000 in Meta today. Now that I hear Jeremy talking it up, I'll probably sell it based upon how most of his stocks have done this year. And yeah, man, I was getting tore up in 2022. It was ugly. There's no other way around it, right? I don't know if that individual ended up selling their $15,000, but man, what a mistake that was, right? Year 2060, people will be looking into these videos to study Jeremy's strategies. Yeah, I mean, it was just a lot of negativity back then. I mean, the fourth quarter of 2022, it was just brutal negativity, right? If you're buying Meta right now, you're betting on Zuck executing on the metaverse. He's good at identifying trends, but I would argue most of his success was from acquiring new platforms. Could it be a good thing? Definitely think it's a bet at this point. And what a wrong, look at, nothing's really happened in the metaverse. In Meta stock, $600 here today, right? Why? Because everything I laid out for people back then all played out, right? The profitability exploded to the upside. They cut employees, right? They had to make some changes there. They got their revenue back on track. Everything ended up being fine, man. They just had to go through a year of drama. They cleaned house. They did what they had to do, and now it's up and up, right? Now we're talking about Meta, I wouldn't be surprised if in a year or two from now, it's $1,000 plus when it comes to that stock, right? What a difference. And it's not because of the metaverse. The metaverse has never taken off to become some huge thing or something like that. Meta is spending billions on the metaverse, but there's no guarantee that they will be successful or that the masses will flock to it. I will consider Meta after the current inflation and rate hike stuff is over in some positive progress on metaverse. Well, if that was your situation, inflation's still here. It's come down, but it's still here. And so if you'd still be waiting to buy Meta stock. If you needed all those things to play out, you'd still be waiting to buy Meta today, right? And now we're sitting on an $800,000 plus gain on Meta stock. Like, that's incredible. I put $201,000 into that stock, and now that 201 is worth well over $1 million. It's incredible, right? So usually it's a pretty bullish sign when I go to make these sorts of buys, and just some food for thought. And keep in mind, the more the stock market goes down, the more fear I see, the more pessimism I see, the more I say, okay, it's time to really start deploying money out there, right? And so let's imagine for a scenario, like, let's say this market goes much more risk off. It continues to sell off hard. Next thing you know, S&P 500 goes in correction. NASDAQ goes in correction. Dow Jones goes into correction, right? Then we're going to talk about some even much bigger buys than I have currently, right? So the more I see weakness, the more I see drama, the more I'm like, let's get out there, let's deploy, because you don't get those opportunities that often when you're talking about those 10%ish type corrections in the indexes, or if you're talking about you ever get those 20% plus moves, which are more like crashes. It doesn't happen very often. So when it does happen, you got to be ready to pounce, right? Now, the other reason I decided to do a big buy here today, right, is you got to keep in mind, we have some things that could potentially turn this market in the short term. One is obviously Trump's, going to be the president as of next week, right? He's getting into office. I think there's definitely going to be some, pretty bullish momentum around that. Right now, there's a lot of fear around what's he going to do with tariffs, this and that. But once he's actually in office, I think there might be a little bit of, optimism that definitely comes into the market, right? Additionally, the week after Trump gets in office, we're going to start to get an onslaught of earnings, and we're going to get an onslaught of earnings all the way through Valentine's Day. Now, here's the deal, okay? If companies come out and they report good numbers, right? They beat analyst expectations on revenue and revenue and EPS, and they have good guidance, what do you think is going to happen to the market? The market's going to trend higher. Like, that's just what it's going to be. Like, they could talk about rates, talk about this. There's all these things that are in focus right now. As soon as those earnings start coming, everybody starts looking at earnings, listening to conference calls. What's the guidance these companies have? If things are strong, market's going right back up. Now, if companies sound like cloudy, if guidance is weak from these companies, and when I say companies, I'm really talking about the big dogs. Meta, Amazon, Apple, Microsoft, Google, Tesla, nvidia, all those companies, AMD, all the big dogs, right? Salesforce, Broadcom, those ones. If they all come in, good numbers, good guidance, we're going right back up. And next thing you know, you'll see the S&P 500 at a new all-time high. But if those companies somehow came in and just reported really down numbers, which I'm not banking on, I would not bank on all those companies having horrible guidance and horrible numbers. Outside of that, you're probably going right back up, right? So that's my opinion. That's why I kind of feel like I want to get ahead of that, essentially, right? If I got a pretty good opportunity in a lot of different stocks, I got to take advantage of that before the earnings come out. Now, additionally, something very important I want to show you guys. So we do this investor report for all the private stock group members every Friday. We post this, right? And Trevor and I, we work on this. And so there's some phenomenal things we show in there as far as just keeping people updated with where the market's at, so people can have an understanding, because I understand a lot of people in my private stock group, they got full-time jobs, they run businesses, things like that, right? Like, not everybody has all day, every day, just to pay attention to what's going on in the market and all the trends and this and that and this and that, right? So we try to put this report together to keep everybody really informed. Well, there's something very specific we showed in that report that definitely is another thing that gives me a signal to kind of like, hey, let's get out there. Let's start deploying some real money. Let's get some multi-5-figure buys going. And this is it. This is the AAII investor sentiment. Now, the historical average for bearishness is around 31%, okay? But we have a clear trend going on week after week after week after week, which is the bearishness is building. So if we look, a few weeks ago, we were at 31.4% bearish when it came to investors kind of being bearish on the stock market the next 6 months. Then that built to 2 weeks ago, 34.2%. Then that built this past week to 37.4%. Now, if we get another kind of week, let's call it week, right? With an A. Another week in the stock market, I wouldn't be surprised if bearishness climbs to 38 to 40% range. So we have a clear trend of bearishness building into the market. And when I see week after week after week, people getting more bearish, it starts to make me say, I feel more bullish and bullish and bullish, okay? So if we're looking at kind of my thing, like the more the market goes down, the more bullish I get on the stock market for the next 6, 12, 24 months, right? Now, additionally, we have that same exact clear trend going on in the CNN Fear and Greed Index as well, right? Where if you look at last week, we were at 33. This past week, we were at 27, right? And then you look at today, the Fear and Greed Index was anywhere between 23 and 25 here today, which is now an extreme fear. So it's clear fear is building in the market. It's clear people are getting more bearish on the stock market, which when I get that clear trend, it makes me want to invest heavier. And once again, the more fearful other investors get, the more I get less fearful, I guess you can say, in the market. The more fearful I get is actually when everybody seems to be greedy and they want to just buy calls, they just focus on what the day-to-day stock market gain is. Like, that's when I kind of step back and I'm like, okay, let me just do my normal buys, but I'm not gonna go do those 5-figure buys or multi-5-figure buys right now, right? I only do that when I start to see week after week after week people getting more bearish and more fearful, right? Now, there's one thing that scares me a little bit. It's this right here. And if you follow my channel religiously, I speak about this all the time. GSG, everybody should have this on their watch list. Commodity index, right? And what we've seen is a clear trend since the Fed did those first rate cuts of GSG moving up and up and up. So this gives me a little pause. This is a little scary to me. Why is it a little scary to me? Is if you're thinking about inflation numbers, right? Let's call it in the back half of this year. Let's call it the second half of 2025. If commodities keep running, that will end up, at the end of the day, like every physical item in the world ends up always coming back to commodities. So the more and more expensive commodities are, right, the more it can lead to overall inflation in the overall economy. And so if we look at, for instance, Trueflation, which I like to look at Trueflation, I trust their numbers actually more than the government numbers. And additionally, I feel like a lot of times they're in front of the government numbers because we're getting kind of lagging government numbers many times, sometimes several months behind, right? If we look here, the U.S. inflation index based upon Trueflation has just risen above 3%. Now, it's not like it's doomsday, but it gets a little scary. And the reason being is look at where we're at just around the time the Fed cut rates. Look at where we are at now, right? I mean, it's a night and day difference. So you kind of start looking at this and you're like, how far up are we going to go here? It's a little scary. Now, we are fine as long as we're in the kind of the 2.5 to 3.5 range. If we go above 3.5 on inflation, then we're in trouble. There's no doubt. We're in trouble if we go above 3.5. That would be a situation in which, we start to worry about rate hikes again. Like literally, if we were to go inflation above 3.5, we start to worry about rate hikes. If you're in the 2.5 to 3.5 range, the worry's not really around rate hikes. It's just kind of thinking about the Fed keeping Fed funds rate around the same. If you go above 3.5, then people start talking about, are we going to start hiking rates again? That would be very detrimental to the stock market. So that's why if you're thinking about, could we get a crash in the market? Could we get the indexes to go down 20% plus in 2025? It's a potential. There's no doubt, right? There's a potential, and I'll be buying left and right if that happens, if we get a crash in the market. But it's certainly no guarantee because you really, truly need inflation to continue to spike for the next several months. This is not enough to make the Fed say, we're going to go start raising rates. This is enough for them to say, you know what, we'll probably keep rates around here or maybe lower just a teeny bit, but we're probably not making much of moves. You go above 3.5, completely changes everything. And suddenly, next thing you know, the Fed's also talking about rate hikes again, and that's going to freak the market out big time, right? Now, with that being said, I buy every single week, right? I buy $250 worth of stocks in the Patreon portfolio, I buy $500 of stocks in a private group, and I also make buys in my private accounts every single week. So you see kind of a freakish buy like today, but I'm always buying every single week. So if people are bearish, bullish, neutral, doesn't matter. I'm out there buying. I'm taking advantage of deals in the market because in any market, you're getting deals in the market, right? And I don't want to always worry about just like buying at the perfect time. Like I'm just going to buy stocks at the perfect time. I want to be buying weekly. And then if I get rare opportunities where I see some real attractive buys out there, then you see me come in with the big buy, right? By the way, Patreon, if you ever want to see all the stocks I'm buying and selling, plus support my content, that's always linked in the description area down there. You can get access to see that, okay? Alrighty, guys. So now that we went through why I did the big buy today, what 7 stocks, and we'll go through my 3-year price targets on these 7 stocks. So first stock I bought here today, I don't think this one will surprise anybody that watches my videos quite often over the past few weeks, and that is AMD. I bought 87 shares of AMD at $114.99. It was a $10,000 buy here, okay? You know, I don't know how much lower AMD is really going to go. And so I'm just trying to buy everything in sight now at this point in time. Like I would love if AMD could go under 100, but outside of a, total crash in the market, I'm having a lot of trouble, getting there. Let's call it that, right? Now I did a video, we can call it 4 or 5 weeks ago called Buy AMD Stock and Don't Stop Buying. And basically in that video, I talked about, over this next 90 days, you buy every share in sight of their stock. And that's exactly what I'm doing. Like, the thing with me is I put my money where my mouth is. Right? If I say Meta's a great buy, right? You see me buying Meta stock left and right. And next thing you know, I buy $77,000 in one day. If I say I think AMD is a great buy, I don't just say that. I come behind it with big money, right? And if you look at how rapidly I'm building this AMD position, I'm coming with a lot of money. Like this is now easily a 6-figure position between all my different portfolios, right? And so I don't really plan on stopping buying AMD in the short term. I'm going to likely continue to buy shares. So that's the thing with me, man. Like I always put my money where my mouth is. And if I say a stock's a great deal, buy every share you can, I'm doing that. Literally, I'm doing that right now. I'm buying every share I can of AMD. By the way, I warned everybody right before Christmas Eve. I put a video out. My new warning for all stock market investors, they're about to flip. I warned everybody, actually, of this drop that we've just seen coming. Next one I bought here is Cheesecake Factory. Another one if you've been watching my videos religiously. And this is a stock I continue to average up on. Whereas AMD is a new buy for me, relatively speaking, right? And it's an average down situation. Cheesecake's an average up. So like I have Cheesecake shares that are way dramatically lower than where we're at right now, but I don't care. Like $47 is still a steal deal for me. And so I'm buying the stock aggressively. I bought another 210 shares here today, about $10,000 move there. When it comes to Cheesecake, so we went to the Flower Child concept. This is probably their biggest long-term opportunity of the brands they own, right? And I went there Saturday with a friend to their new Henderson location that's only been open maybe a month or two now at this point in time. And, he loved it. I loved it. Insanely busy there that particular day. And then on Sunday, I went with my 3 boys. I just myself and the boys that particular day. My wife was getting her nails done. And went and, kids love the food. It's always like very high quality, fresh, healthy food they serve there, and it's just phenomenal, right? Great experience. Everybody's super kind as far as the people that work there and whatnot. Just phenomenal. But when it comes to cake, forward P on this one, 13, it's just silly, man. You can't have as many growth concepts coming behind this company as Cheesecake has, and have the company trade at a forward P of 13. It's just silly. And over this next few years, Wall Street's going to wake up to this more and more and realize we need to put an actual real multiple on the stock, not a 13. Like it's absolutely ridiculous, right? And so, and we'll speak more about where I see Cake's stock price going here in a moment, right? Next buy up here might surprise some folks. It's been a while since I actively been buying the stock. I hold a lot of shares of it, but as far as an active buy, I bought 1,750 shares here today of HNST, Honest Company, right? Honest, if you don't know, sells diapers, wipes, beauty products, makeup products, right? Go in a Target store, you're going to find Honest products all over it. And they're also in Walmart now, Amazon, things like that, right? So I paid $5.67. Honest is a stock that is now out the gulag. This was around a $10,000 move. But when it comes to Honest, I mean, the trend's pretty clear. Like, they continue to build on revenue. But the biggest story is not revenue when it comes to this company, although it's great to see revenue building and more, right? Bring in more money. The best thing is the margins. I mean, look at where the margin profile has gone. The gross margins specifically. Gross margins were, a little over 20%. Now we're talking about gross margins getting close to 40%. And I think there's a decent probability they're going to go over that 40% number at some point in 2025 when it comes to their gross margins, which is going to be monumental for this company. Additionally, the company's actually getting the real profitability. The company was a huge money loser. I mean, it was off the charts how much money they were losing on a net margin basis. And now we're talking about the net margin should build substantially over this next 2 or 3 years. So that is, I would say, very, very bullish. And I like Honest. I can't wait for their earnings. I mean, they're a company that a year and a half ago, you would sweat it if they were reporting earnings. Like, oh my gosh, what type of disaster are they going to report? And it's just completely changed massively when it comes to this company. And now I'm actually looking forward to, I can't wait to hear Honest's numbers. I can't wait to hear the conference call with Carla and Kate Barton and all those folks, right? Next buy I made here today is Nike. I bought 140 shares of Nike NKE on this one, paid $72.26. Another one of those stocks that if you've been watching my videos for the last month or two, shouldn't come as a surprise. $10,000 buy here today. 3 weeks ago on the channel, I did a video called Nike Stock is Easy Money. It has 99,000 views now at this point in time. If you want to watch an interesting video in regards to Nike, I would maybe check out that 29-minute video there. That's definitely a very helpful video. And, for me to call stock easy money, as I tell you guys, I never throw that term around unless it's a crazy opportunity. The only time I ever throw an easy money term around is when there's a stock that I find where over the next 3 years, I would say there's less than a 5% chance I'm going to lose 50% or more of my money in that stock over the next 3 years. And there has to be, I would say, like a 80 to 90% at least probability that I believe I'm going to 2x or more of my money in that stock over the next 3 years. If I could find that, it's truly an easy money stock. But those are very rare opportunities to find, because a lot of stocks, it's like they might have that 2x, 3x, 4x potential over the next 3 years, but they come with a lot of risk, right? For me to call stock easy money, it's got to come with very low risk over the next 3 years and a very high reward potential. And that's why I'm talking about load the boat on Nike stock right now. Like, it's, steal deal, and I don't think we'll get these prices forever. I believe I also spoke about Nike stock in this video here, 7 stocks to buy now, January 2025 edition, back when I still had my hair, and then my hair went bye-bye. Now, I wanted to design some 1000X shoes, some Nike 1000X shoes, something that kind of went with the whole color scheme of 1000X and everything, right? And so I came up with these bad boys here, and I bought a couple pairs. I bought one for actual running in, and the other pair I bought for, just wearing around and whatnot. But yeah, 1000X stocks, baby. I like them. I hope you guys like them as well. I can't wait to wear those whenever they come in. Next stock I bought here is SoFi Technologies. $13.83 I paid for those shares, $725. This is another example of a stock that I'm averaging up on. SoFi, I have shares of SoFi in my portfolios probably at like $6, $7, $8, right? And so for me to buy SoFi at $13 or $14 definitely shows like this is still a tremendous opportunity in this market. That's a $10,000 buy here today, right? SoFi, by the way, if you don't know, think of it as new age bank, right? Digital focused, not branch focused like the old banks. Also think of it as fintech. They're kind of a mixture, of my opinion, of new age banking mixed with fintech. So 725 shares there. I believe SoFi was one of the 5 stocks I spoke about in this video from 4 days ago. 5 stocks to buy non-stop the next 90 days. Yes. So SoFi, great opportunity. We'll talk about where I see that stock price going over time here, okay, in just a moment. The other stock I bought here today, Wynn Resorts, ticker symbol WYNN on this one, 120 shares. Paid $81.45 for those shares. It was about a $9,700 move here today. A couple big things as far as news in regards to Wynn Resorts. One is they're going to be acquiring a high-end London casino from Crown Resorts. And this is a members-only casino. No, this isn't like some sort of massive acquisition in terms of like this London casino makes so much money, like it's going to change Wynn's financial future. No, it's a higher-end play than that. Since this casino has a lot of very high net worth individuals that are members of it, Wynn's essentially going to funnel those folks over to the Middle East property when that property opens, okay? So that's an important thing to understand, because you understand a lot of United States folks, they might not feel like going all the way to the Middle East for when Wynn opens that property, right? They're like, I just go to the Wynn or the Encore in Vegas. It's amazing. Like, why do I need to go all the way to it's not technically in Dubai, but it's in the Middle East, kind of in that area, right? And then the Chinese are like, do I really need to go to the Middle East? Like, I could, but why wouldn't I just go to Macau when you got Wynn Palace there, right? Which is, just the top tier of top tier properties. And then you got the other two properties in Macau as well. So, but the Europeans, a little bit different there. So the Europeans, since they don't have a Wynn in Europe, right? Those folks would be much more, I would say, incentivized to go see that Middle East property as well, right? And obviously there's so much money in the Middle East in general, like that property is going to be a banger. But you want to bring those high-end Europeans that have money and like to game, you want to bring those over to the Middle East as well, right? So I think it's a high-level chess move by Wynn Resorts. I think it's a good acquisition. I'm looking forward to it hopefully going through. And I think it's brilliant, man. I think it's a good move. Very strategic move by the company. Very strategic. Now, the other piece of news we got in Wynn Resorts, this could be seen as a good thing or a bad thing, depending upon your standpoint. But basically, Wynn's been wanting to build this epic, unbelievable property in Manhattan, okay? Which, at first, I was bullish on, and then the more I got to thinking about it, the more, and I talked to some folks, the more I got bearish on it, actually. And I was like, actually, I hope Wynn doesn't do this project. But essentially what came out here is Manhattan Community Board 4 has unanimously or unanimously voted a no to a proposal by Related and Wynn Resorts for a casino in Hudson Yards. Plans for the seemingly squashed project were filed with the New York City Department of City Planning last year, as reported by AN. Friends of the High Line, a local nonprofit, also came out in opposition to the casino. So it's looking more and more like the New York City Wynn property in Manhattan is not going to happen, which, I'm just going to be honest with you guys. I'm kind of happy about, because they were going to spend fortunes on this, and I just don't know if I have faith that Wynn in New York City would be able to keep a great relationship there. And so I'm rather fearful of that. So, hey, it is what it is, man. It is what it is. Additionally, I went ahead today and bought some Shopify shares, about 100 Shopify shares, about right around a $10,000 move. Bought those shares at $99.84. Another stock I'm averaging up on. Shop, I have shares at such cheap prices, it's insane, right? Now, Shopify was one of, 7 stocks this in 2024 that I featured on a series called Buy This Stock and Don't Stop. Now, I'm thinking about bringing this series back in 2025. It was really successful in 2024. I mean, almost every single stock I featured on there is dramatically higher than where it is now, right? But these are stocks I featured: Tesla, Elf, AMD, Shopify, Nike, Palantir, and Celsius. And I believe Shopify was the first stock of the bunch I actually featured on that series. So maybe I'll do that series again in 2025. Let me know what stocks you think I should feature on Buy and Don't Stop Buying in 2025. I love to hear from you guys as far as that goes, okay? Alrighty, so now where are my price targets at for these 7 stocks? Well, here's where I'm at, okay? AMD. So AMD I have growing an average of 25% per year revenue. Keep in mind, some years they could far exceed that number. And I think I'm actually pretty conservative with 25%. When I look at all of AMD's growth vectors over this next few years, 25% might end up being low. Net income obviously is going to explode in 2025, and then I think kind of even out to more of like a 30% type number over the coming years. So essentially here, looking at a share price somewhere between $400 and $500 3 years from now, roughly, right? So, yeah. I think AMD's got some upside ahead. Nike stock, maybe not the most exciting. I have them doing about 10% revenue growth on average over the next few years. And net income, I have basically 2025 is going to be a big net income growth year for the company and EPS growth because of obviously the cost cutting measures they've had going through. And then I think they're going to get revenue back to a really good place in the back half of the year. So I think net income is going to be kind of explosive, let's call it, in 2025. But after that, I have them doing 15% net income growth per year and 10% revenue growth. Now, 25 to 35p is pretty fair for Nike, such a high quality company with this sort of, we can call it low double digit growth, which puts the stock somewhere between about 150 and about 210 come, 3 years from now, roughly. So, yeah, I think Nike's got some really good upside. But remember, with Nike, it's not just about this upside potential over the coming years. It's about what are the chances I lose half my money in the stock, right, over the next 3 years. And I think there's an extremely low probability of that. Wynn Resorts, where am I at here with Wynn Resorts? So Wynn Resorts, I only have them doing 5% revenue growth 2025 to 5% 2026. But then 2027, when the Middle East property opens, I have them basically having revenue growth of 20% that particular year, and then going down to 10% in 2028. Now, as far as net income growth, I had them just doing 8% over the next couple of years, but then 40% in 2027, right? That is going to be a huge profit, and it's going to go from basically dragging the business as far as the net income goes to actually making them substantial amounts of money, right? And then 12% EPS growth, net income growth in 2028. So 25 to 30 P is pretty fair, in my opinion, for Wynn with these sorts of growth rates over the coming years, which puts the stock somewhere between about 150 and about 180 when it comes to stock. Something to keep in mind in regards to Wynn Resorts, if it ever goes under $80, it's a load the boat stock. If it's in the kind of the $80 to $100 range, it's a strong buy. 100 to 120 is just a buy. And then if it goes over 120, usually just want to hold the stock, okay? Now, when it comes to Cheesecake Factory, I had them doing 8% revenue growth per year on average over the next number of years. Next year is going to be a big year as far as profit recovery for the company, about 25%, and then going to about 11% net income growth per year. Now, I believe Wall Street's going to get this story over the next few years, and they're going to command a much higher PE ratio because the growth rates are going to start putting up and people starting to understand Flower Child, North Italia, and how big those concepts are going to be. Never mind what's coming behind those two concepts, right? So basically share price have being somewhere around $126 to $151 a few years from now. So pretty extraordinary opportunity. And do remember, Cheesecake is not just about how much money I make on the share price going up over the coming years. It's also about the dividends, right? I'm already making substantial amounts of dividend money from Cheesecake. But as the profitability builds out over the next few years, that dividend amount is going to get bigger and bigger and bigger. Those dividends are going to be thrown off to me, which then I can go ahead, buy more cake shares if I want, or buy other stock opportunities I see out there, right? Shopify, I have them doing 22% revenue growth per year on average over the next number of years. And then net income should be a big year, 2025, and then kind of go to that 30% range, in my opinion. We can call it 2026 to 2028. Now, Shopify is going to command a huge PE on it. And the reason being is when they kind of get put in the SaaS category, software as a service. Those type of stocks always command big P's even when they have lower growth. Never mind when we're talking about 20% plus revenue growth, 30% net income growth per year, EPS growth. I mean, oh my gosh. So I have this stock going to somewhere around $200 to maybe $260, somewhere around there in a few years from now. So Shopify, phenomenal opportunity. Now, when it comes to Honest and SoFi, those ones are a little bit more complicated because they're just getting to that profitability stage, right? But here's the way I look at it. If you look at Honest's growth rates, they far exceed peers like Procter & Gamble and Kimberly-Clark, and it's not even really close, right? Now, additionally, when you look at a price-to-sales ratio, which is the best way to measure Honest versus these companies right now, because Honest is just starting to flip to profitability, right? So you really want to look on a price-to-sales ratio. If you look at a forward price-to-sales ratio of Honest, we're about 1.5. Procter & Gamble is about 4.3, and Kimberly-Clark's around 2.1, right? The moral of the story is, I believe Honest should be actually commanding a higher price-to-sales ratio than these two companies right now, given that Honest has far better growth than these other companies, right? So what's going to happen here is I think Honest is going to go to $10 to $20 range over this next 3 years, and it's going to command at least a price-to-sales ratio somewhere comparable with like a Procter & Gamble, which once again puts the stock somewhere between about $10 and $20, we can call it 3 years from now, right? So it's going to have some dramatic moves up, and it'll have some dramatic moves down, right? But at the end of the day, like that's where I see things evening out. Worst case scenario, 10. Best case scenario, probably around $20, which is significant upside. It's a stock that's $5 here today. So if you can go from 5 to 20 in 3 years, like that's a win. Even 5 to 10 in 3 years is a huge win. Never mind 5 to 20 or 5 to 15, right? That's a phenomenal move there. Now, as far as SoFi goes, SoFi is I kind of consider them limitless. And the reason being is SoFi just has so much growth. It's just such an exciting company. I mean, in my opinion, they're by far the most exciting company in overall banking and finance by a mile. And I don't even think it's really close, right? And so I think SoFi might end up becoming the next Palantir. Palantir is a company a lot of people look at, a lot of people hate on, and they say it's overvalued. They say it's ridiculous the way this company's trading, right? A lot of us have made, certainly game-changing money on that stock. I see a lot of similarities with SoFi, where I believe a lot of people are going to get this story a lot more over this next few years. And let's call it, it's going to be a whole lot higher than $13, right? And, you know, I wouldn't be surprised if a few years from now, people are running numbers on SoFi and they're saying, this is ridiculous. Like, this stock's overvalued. It's a bubble. I wouldn't be surprised at all if they're saying that in a few years from now. So, yeah, I would say SoFi is a limitless stock. Like, if SoFi was $100 3 years from now, I wouldn't be surprised. If SoFi was, you know, $30 or $50 3 years from now, I wouldn't be surprised either. When just that sort of company, like, I just see everybody, as a company gets more and more profitable, as our revenue keeps pouring in, their members, I think everybody's going to want to pile in and want a piece of SoFi, right? And in longs, you got to understand there's a lot of diehard longs that have built in SoFi similar to Palantir that have been through it with the stock. That when the stock starts beasting a lot more, next thing you know, it goes to 20, 30, they're not going to be in a rush to sell. Alrighty, guys, appreciate you joining me as always. Thanks so much for being here. If you're looking to access all my best premium courses out there, pin comment down there, click on that, fill out a form. We'll see if we can get you access to my entire private stock group, all the course curriculums, the Discord chat, access to 1000xstocks.com, the entire research platform, all that good stuff. Much love and have a great day.